come on in, come on in. This is where if you were like in an in-person room, you'd be like, take a seat, don't be shy, fill up the front row. Do you want to just drop in the chat like your LinkedIn or like your LinkedIn, just so that people can get a sense of who's here. Um, and then why don't we? I'll start. I'll keep admitting people, and then Eagle, do you want to kick
Get
things
started?
off?
Yeah. Hello, everyone. Thanks so much for joining us today, and hope you all keep warm from the first snow of this year. And we are very excited to kick off our first female founders event this year. And today we have three amazing founders joining us and to share their journey as a female founders. And also we will explore the diverse paths they have been taken to build their business, and also the valuable lessons they have been learned from along the way. This event is hosted by the Knowledge Shop and OneRise. So the Knowledge Shop is the founder community in NYC and empowering entrepreneurs from every industries. And OneRise is a nonprofit to support early stage underrepresented founders. So you can find more details from our website. I will post in the chat. Without further ado, I will give stage to Tori to start the panel with our panelists.
Amazing. Well, thank you so much, Eagle. This is our first event that we have done together. We've sort of been talking about it for a while, and it's lovely to see it all come together. Um, Female founders just don't get enough love generally. So it's great to have three amazing founders who are here to share their story, and everybody here as well, who's clearly interested in either trying to boost their odds of like really making it, whatever that means to you, or you are a big female founder advocate and just want to come and help and support as much as possible as well. So just do a little bit of housekeeping. So from an agenda perspective, we're going to do the panel until about like 6:45, give or take. Then we're going to do questions. So we'll start asking people to put questions in the chat in a minute. And then we're going to do some networking towards the end as well. So we're going to do breakout rooms based on industry, based on the stage that you're at, and then just potluck as well. We know that networking is a really important part of why people like to go to events. So just because it's online shouldn't make any difference. So with that, let's kick things off with a few polls just so that we can get a sense of who is actually here. Okay, so here we go. So we've got the first one. Who are you? It's a very simple, straightforward one, just so that we can get a sense of who you are. Maybe give you like 5 seconds. I think we can very clearly see. I'm going to end this one. We can very clearly see there is an overwhelming 80% of you guys are founders, a female founder advocate, which I always love. We've got a few investors and then service providers. We are now asking about like your founder journey. So let's launch this one. So you should be able to see this one. Where are you at in your founder journey? This one takes a little bit more thinking. I'm gonna give you 5, 4, 3, 2, 1, end and share. So here we've got 50% are bootstrapped but want to go VC, 6% bootstrapped and happy that way, 10% have raised from angels, 16% are already VC, and then 20% still ideating or don't need funding. So that's a really interesting mix of folks there. And then lastly, industry. Which industry are you from? And we tried to cover like a few different ones. If we didn't cover yours, I'm really sorry. Just go with something else and then put it in the chat so that we know and we don't overlook you. Okay. Yeah, I really wanted to put travel, Karen. I was like, the travel fan in me. I was like, I should put it. If I didn't. Um, okay, right. Let's end that one and share the result. So, unsurprisingly, AI is right at the top there. So, a quarter of you are in the AI space. About 15% of you SaaS, 20% consumer, 20% or so health, and then the something else is like another 15%. So yeah, so do keep putting that in. I saw some travel, I saw femtech, fitness. Um, that is really helpful. And when we go to the networking later, that will help us with the breakout rooms as well. So with that, now we've got a bit of a sense of who is here. I'm gonna like stop talking because I feel like I've been talking for a really long time now, and I'm gonna hand it over to April, Jessica, and Marta to just like introduce themselves and to say a little bit about them, their companies, and the origin story. So with that, just because it's like alphabetical order, April, do you want to go first? Do a very quick like 60 seconds like intro who you are and all the great stuff about Cheeky.
Yes, for sure. I'm April Wachtel. I'm the founder and CEO of Cheeky Cocktails. It's a line of professional cocktail ingredients for the home and bar. So they're professional grade, but anyone can use them. So we currently sell in about 1,300 accounts in 50 states, and that goes from 4 and 5 star hotels to brick and mortar retail. We sell direct to consumer, shipped to all 50 states as well. And my background is I've been in the beverage industry for many years. So I'm a former brand ambassador for Bacardi, consultant for Diageo, and a cocktail instructor with over 12,000 former students. So I'm excited to be here today and hear these other founder stories as well.
Amazing. Thank you so much for joining. Jessica, do you want to go next?
Yeah, hi everybody. So happy to be here. I'm the founder and CEO of Scene Shopping. We are actually personalizing how you do all of your online shopping for clothes, shoes, and accessories so that it doesn't feel so hard and time consuming and to help you avoid mistakes. So if you are not thrilled with how you dress or want to elevate your look, we're building the first truly personalized, almost fashion coach to help you do that. My background is in management consulting and a little bit of law, but mostly in operating roles in different VC-backed companies in e-commerce, fashion, and marketplaces. We'll get into this, but I raised VC funding for a totally different idea a year and a half ago, and happily have landed back in e-commerce and fashion tech, which is where my heart is. So very excited to see you all and talk more about all of this.
It was your calling, you couldn't hide. Thanks, Jessica. And last but not least, Marta, all the way from Spain.
Yeah, hi everyone. I'm Marta. I'm the founder of Ting AI. I'm from Spain. I'm an immigrant based in San Francisco. And Ting AI is a software that helps sales reps be more efficient with their time. So the way it works is we automate everything that is back office for them so that they can focus on their customers, right? We automate things like note taking of their sales meeting, reporting onto the CRM, helping them prepare their meetings, and helping them with the follow-ups. And what's really special about the company is that although we are B2B SaaS, our go-to-market is bottom up, right? So we are targeting directly the sales reps instead of the managers. And a bit about my background. I've always been in tech for the last 10 years. I've been working in tech. I worked in startups and scale ups that became listed. I worked in VC. So I've been like a bit of everywhere. I was also a founder of a different company. So yeah, a bit of everything. And I'm really passionate about sales. I struggled with sales a lot. So this is really coming from a frustration of myself.
Love it. I mean, so many people struggle with sales. Like that in itself could be its own topic, like selling for people who don't do sales. Um, well, great. Thank you so much for that. And I think just, Jessica, I think, touched upon this with some of her fundraising journey there, but just to level the playing field, can you guys, and maybe just because you're on the floor still, Marta, where are you at? Like, how are you funding your company at the moment?
Yeah, that's a great question. We were just having this discussion with April before the meeting. For us, we started with a couple of grants, and that took us further than we thought. We started getting traction. So right now we are ramen profitable. So we are both funded with a couple of grants that still last for us, and we are also getting our office paid by the government of Spain and other things like that. And other than that, we are bootstrapped. So we are ramen profitable, which means that most of our costs are paid by the income that we're getting from customers.
Amazing. And April?
So we bootstrapped for the first several years. I had a different business that I basically pulled apart and put back together as Cheeky. So I bootstrapped that almost completely. In that time, we also did a Kickstarter. We got a Kiva loan, but we didn't get any, excuse me, external investors until the relaunch basically in 2020. And so now I'm on my second seed round, and I did a convertible note, and now it's a safe. Yeah.
Amazing. And I think the continuation of the conversation that we had backstage, so to speak, was just a lot around even that mental decision making of to bootstrap, to go venture, to do a little bit of both. Like that in itself can be a really big challenge. How did you like even get to this point in your fundraising journey? Can you talk us through a little bit of that?
Me?
Yeah. Oh, sorry. Your big screen. Yes.
Oh.
Nobody else necessarily sees that way, but yes.
Yeah, for sure. So actually, to Jessica, well, Jessica had commented offline backstage earlier about this, about the pressures of VC funding. So I started learning about funding or fundraising for a business through Shark Tank many years ago. And then I got much more involved in like the VC world, like really trying to understand like what businesses are investable and, you know, what ideas are compelling to VCs. And I think at a certain point, I realized that with a CPG, a consumer packaged good product like myself, it operates very differently from a tech business. When you're shipping physical product around the country or around the world, it's just a very different type of business and different expectations on growth. So I think I kind of worked back from being like VC is the best fit for somebody like me to then saying, well, I've seen all of these CPG companies explode because the pressures of growth coming from this specific asset class were so heavy that they kind of just got over their skis and the businesses could not keep up and they couldn't raise their next rounds. So I think I just got scared off of it a number of years ago. And so I just started having friends and family and ex-clients inquire if they could invest when I relaunched the brand as Cheeky in 2020. And I was really learning about like what like financial instrument even makes sense here. Now that I've raised the convertible note and I'm on my safe note, I would never personally raise a convertible note again. So I learned why I wouldn't want to do that through actually doing it. And then when I realized that a safe was like a really good solution for somebody like me, it enabled me to get the types of angel investors that I wanted to come in. It enabled me to have a rolling close so I could accept smaller checks or larger checks and complete that transaction without filling out the entire round. Many of those considerations are why I ended up with the fundraising that I have.
Mm-hmm. And before we move on, you made a very definitive statement about never wanting to do a convertible note again. Like, talk to us a little bit about that.
Yeah. So I don't know how much everybody knows about these different instruments, and I hope I don't butcher this in some way. So if anyone has any feedback on it, feel free. But I think the simplest way that I explain this to prospective investors is the most straightforward way to raise external capital is raising a price round. So it's like, I'm going to give you $1 for 10% of the business. It's a $10 valuation. There's a couple of other instruments, a convertible note and a safe note, that are a little bit more speculative and they're more founder friendly. I think the long and the short of it, when I'm comparing the convertible note and the safe note, a safe note it's a templatized document. It was created by Y Combinator, I believe. There's a ton of information about it on the internet, and it's really easy for investors to understand. So it's like you change a couple things in the document, and then you sign, you get a wire transfer, you've got money in the bank. The challenge with the convertible note is, well, there's a couple of things, but the main challenge is it required so much legal support for my legal team and then from the legal teams of the investors. They were not sophisticated institutional investors, so they had never seen, like they were just like, we just want to get straight equity. So there's a lot of education, and I mean, maybe 5 months of back and forth and back and forth and back and forth. So it was just a really weighty, time intensive alternative to what I now use, which is a really easy, simple to understand document.
Amazing. Thank you so much for walking through that, because I'm sure that is the first time that a lot of people here are even hearing that. Jessica.
Can I just pepper on a comment on this? So yeah, I'm grateful to YC for implementing the safe, because now, at least based on my experience, that's the default. With a convertible note, to your point, it's very complicated and you actually owe the money. Whereas with a safe, you don't owe the money back if your company shuts down. Like, that's the risk the investors are taking. And you literally can like pull the safe template, Google YC safe template. There are some particulars around whether it's pre or post money, cap and or discount. So I won't bore you with all of that now, and I'm not an expert, but yes, like I can't, at least based on my N of 1 experience, to piggyback off of what April said, I can't think of any reason to go with a convertible note at this point. Like, use a safe. And safes, like I said, like April mentioned, if you're early stage and on this phone call, like you should be raising on a safe, not a priced round. That is much more complicated to close. It is less founder friendly. You don't want to stack a bunch of safes forever, because there are downsides to that. But just want to reiterate to anyone who this is new to, like, go and talk to lawyers, obviously, but go with a safe, not a convertible note.
Thank you. And you shared already, you're entirely VC backed, aren't you?
I am. And so I'm happy to talk about that and why I did that. And it's relevant at two different stages. So I raised money like a year and a half ago for an entirely different idea off of a deck. So I went kind of like the opposite, where I was like, I want to impact tens of millions of people, and I want to build a tech product, and I'm not going to be able to be profitable anytime soon, nor do I have like oodles of money, to live on sitting somewhere. So I ultimately decided, and my world tends to be more VC backed. So I actually love hearing about other stories, because I think I did this program with Primary Ventures. It's a founder fellowship for founders in New York a couple of years ago. And they started the first session by saying the most important decision you will make about a business is whether you want to be like on the VC train, roller coaster, whatever analogy you want to use, or not, because once you're on it, it's really hard to get off of it. Having said all of that, I thought about that and very quickly decided, like, no, I want to go the VC route. So I raised a pre-seed, and then it's become relevant again as I've pivoted. But again, what I'm building now, while it has started to have revenue, it's not to the extent, I do need to be VC funded, because I'm trying to truly transform how we all shop. I think it's a deeply broken system that we're there to serve the close, not the other way around. And I hope to one day have technology that like tens of millions of consumers are using. In order to get the data and the traction I need, it needs to be priced appropriately, which also I care about, getting affordable help to people. And that's not a price I can charge to be profitable. So, and given the size of the e-commerce market, it is a VC, and the automatable solution, it is a VC backable business. And so I will likely raise again, a seed and sometime in 2025 for a lot of the same reasons, which are the impact, the scale I want to have quickly, what's required to make it successful, and the fact that it checks the boxes around large market, why now, founder market fit. VCs care a lot about pattern matching, from what I understand. So that's why I continue to be on this VC back journey and haven't really looked back.
Mm-hmm. Amazing. And so continuing with you, Jessica, on your VC founder journey, I think quite often people like hear, oh, I got my first checks in, and it was a really super easy process, and I thought about it and they just appeared, and then like 2 weeks later we closed our round. That seems to be like the really common like misnomer. In reality, it does not work like that, and it takes a hell of a lot longer with many, many back and forths. Can you just talk a little bit about what your journey looks like how it all came together, the time it took, I don't know, the challenges that you didn't even know about were going to be presented that popped up?
Definitely. So there are people who do close rounds in a very tight timeline. Like those stories are not made up. They do happen. But unfortunately, I think we hear more of that than the other stories, which are even really talented founders with great businesses. It can take months to do this. I think, the most skilled and or lucky and or well-positioned founders can do it in a couple of days. But, I think realistically it takes more like, it can take a quarter, which is what ended up happening to me really when I did my round. I started with some angel checks that happened to be written by people who are VCs in real life, which helped give me some credibility. And I actually had only intended to raise a friends and family round, but because I mentioned earlier, my network tends to be more VC based, I ended up in a position where I was pitching kind of smaller VCs, not the most major ones, just because of the amount I was trying to raise. And so from when I started, like initially just talking to angel investors to when I closed my round with the VC was 3 or 4 months. And so just to give like, more realistic, and again, I was a solo founder, raising off of a deck, which is definitely not the easiest thing to do. But yeah, it took me 3 to 4 months to do that. And then one challenge, and actually, so 2 things I want to just highlight from that, and then I'll give the floor back to Tori. One is, I know we're going to talk about networks at some point, which is interesting, but the VC that I ended up raising from had actually found me on LinkedIn like 10 months prior. I had changed my LinkedIn to say founder, which by the way, I think all the VCs have like an algorithm set up to get pinged when somebody says starting something new or in stealth mode. And so they had reached out to me 10 months prior. We had one conversation and then we just didn't. I was like, look, I don't even know what I'm building yet, whatever. And then they had happened to check in with me. And I actually had a term sheet from another VC that ended up being able to serve as leverage. There is no replacement for having leverage and options in these negotiations. That's actually like probably the number one thing I can tell you. And so that ultimately helped accelerate the decision by this VC in September and get that done because I had another offer on the table. So this speaks to like, you never know where things are going to come from and timing. And like the more expansive your network, the more atoms there are to kind of like knock into each other. Wanted to make the point about leverage. And then the third thing I wanted to say, which isn't about the VC, but just in general, it's unbelievable. Like until that money is sitting in your bank account, it is not real. And so it is unbelievable the number of people who will say like, I'm definitely in. And like, until that thing is signed and the money is wired, like, you have your feelings up in your chest. So I just wanted to call that out too. So that was a challenge that I didn't anticipate of like the gap that can be between what someone says they're going to do and what they actually do. And that's more on the angel side, actually. That's less on the VC side. It's more on like the angel friends and family side.
Thank you for sharing. April, did your fundraising journey look any different to that, or was it pretty similar in terms of like whether people followed through or not, or timelines, or when you started to get the money in?
Yeah, I mean, I think that these are like absolutely as far apart and like completely different paths as you could imagine. VCs, their job is to allocate capital. So like you can find them, you can find their theses and you can reach out to them. And obviously warm intros are better than cold outreach, but there's like clear ways to contact them. When you are looking at angels or like other high net worth individuals, some of them are listed places in databases, some of them make their investments public. Many of them are completely private about it. So it's much more of like a, what is it called? Like feet on the street, kind of like one-to-one, not combat, that's the wrong analogy, but it's a lot more of like somebody having real trust in me or, and then somebody has real trust in them. And then they say, you need to meet this founder. Something that's very interesting is we actually, as part of our SAFE, I actually raised a WeFunder round, so equity crowdfunding earlier this year. And something that was very interesting of that is I raised like 100K in a month And I dedicated, I don't know, it was a very part-time endeavor for me, but like I recorded a nice video and like I put my deck in there, like I put a little effort in, but it wasn't like my main focus. But what was interesting of that is probably about 30K came from people recommending me on like publicly on LinkedIn, and people just being like, great, I'm in, because they had that degree of trust with that person. They were like, they would not publicly say this founder is backable unless they believed it. And of course, they looked over the campaign and all this other stuff. But it's to say that like it's a very different path. My path is more like I'm trying to build $1 billion business. I have relationships with all the major strategic investors in our space. So my path is much more grow this 3 to 5 years and exit to a strategic rather than anything else. And so I think that that's just like a completely different playbook, at least from where I sit.
Mm-hmm. Yeah. And I think, just thank you for sharing. I mean, I think knowing what your ultimate exit strategy is like fundamentally impacts in so many ways, how you're even going to grow your business.
Yeah. That's actually on that. And we were talking about like conflict around like, do I want to raise? Do I not want to raise? Who do I want to raise for? That tied me up for probably like 3 years in the early stages, is not knowing like, of course, I've always known I wanted to make this huge, but I didn't know like, when do I want to give up control? And like when am I comfortable like actually even having a board where other people have real like valid input into what we're doing. So for example, right now, I'm the sole decision maker on the business. I have advisors, like formal advisors and some informal advisors as well. But I wanted to maintain that autonomy, at least for the early years of my business, because of what I have seen with CPG brands growing, exiting, and then being like completely lost in the shuffle within the strategic acquires ecosystem. And so it took me years to figure out what my actual like financing path was going to be, because I didn't know exactly where I was going to end up, if that makes sense.
Mm-hmm. Yeah, no, perfect. Thank you. Thank you for sharing. And to bring Marta into the conversation, you're obviously building a business very differently. You're entirely bootstrapped. Talk to us a little bit about how you even identified funding sources for you, knowing that at least to start off with, you wanted to keep control entirely.
Yeah, to be honest, I didn't really make the choice. It was kind of natural. So just to give you a bit of the chronology of how things happened, I launched Ting in May 24. We got into an accelerator in SF, which started in late August 24. So we got a lot when we launched. We got a lot of opportunities of raising in Spain. At that time, I was in Spain. We got opportunities. Same thing as Jessica. When you update your status, a lot of people reach out to you. But I was like, okay, I'm not gonna raise in Spain because I'm going to San Francisco and it's gonna be a whole different game. Like valuations are completely different. So we decided not to raise. Started to operate like super scrappy. I'm extremely scrappy. So like looking for grants and getting into all of these startup programs and getting credits for different things. You can get credits for almost everything, like Amazon credits. Like you can get a lot of different credits. We hired interns that we didn't pay them. So a lot of things like that. We got the office paid for. So we got a lot of things like that. And we realized that we started making money. Like we launched the product and we started making money. So it was like we didn't really plan for that. We were just waiting to move to San Francisco to start raising, and things started moving. So that's when I realized, okay, what do I want to do? Like, because now it started, and it's not like if we raise now, it wouldn't be pre-seed anymore, right? Because we already started, we got going, right? And this is working. So that's when we started thinking about, okay, what's right for us? Should we raise a pre-seed? Should we wait for seed? Then as soon as we moved to San Francisco, I was like, okay, now I'm an immigrant here. So if I wait a few more months, I can get more contacts. So that's when I started. And Tori, you were asking, Marta, did you go to pitch competitions? I realized I I had to really go out there and start to meet people, right? As soon as I landed, like and start building my network. I couldn't just land and raise, right? So that's what I've been doing. Like I've been going to all of these pitching events. As soon as I got into pitching events, I got invited to podcasts, and then I got invited to events to give a panel like this one. So the wheel starts moving. And now I'm like, okay, I think I have, okay, my company is going well. I'm making money. The numbers are interesting. I have a network. So I think now I have like a way more solid foundation to raise and go for it. No? So this is a little bit about my story.
Mm-hmm. Amazing, thank you. And I think that's like a natural segue too to start talking about the importance of network and strategic partnerships as well. Did you realize like how important building a network was going to be, or was that something that you just sort of fell into?
Is this for me?
Oh yeah, sorry, Marta.
Oh yeah, sorry. Good question. I think I did realize. I did realize like because when we launched in May in Spain, I realized like the amount of VCs that messaged me and the amount of, yeah, it was because of my previous experience in tech. Like it was all people that were connected to me or that they were like a first degree connection to someone I knew. So I did realize that it happened because of that. And I knew that if I wanted to have the same effect happen to me in San Francisco, I had to build the same network as fast as possible. Like I couldn't afford 10 years of my life of working in tech. I had to do that like in an accelerated way. So I did realize, and I did put a lot of effort into that, like going to a lot of events. Yeah.
Fab. And any tips in particular, like that you can maybe share, especially around like helping people expedite, like because it's really easy to sort of land and go, oh my God. And land could mean anything, you know, land can mean the beginning of your startup journey. You don't literally have to be moving country.
I want to share a fun fact, or a fun story. Like in Spain, like I had built a career in tech for 10 years. I felt like I had a reputation and everything. But when I moved to San Francisco, no one knew me and no one knew my school. No one knew anything about me. So I was just like some random person. And I realized like I wouldn't get, compared to Spain, where I was invited to podcasts all the time and it was so easy for me. In the Bay Area, I was just like some random person that no one knew. And it was super hard to, like, I couldn't hire, like compared to Spain, where I hired people for free. In San Francisco, it was so hard. Like, everything was way harder. And I realized like things were not getting to me inbound the same way they did in Spain, right? So I realized, okay, I have to go out there. So I was like applying to all of these events, pitch competitions, and I wasn't really getting accepted that much. So it was kind of embarrassing. And it was like starting from the ground up again, no? And I ended up, like, to get started, I ended up going to pitch to an event called what was it? Founders Getting Roasted, literally. So it was like comedians, like 12 comedians roasting founders pitching. Like this is the only place that I got accepted to pitch at the beginning. And it was so embarrassing, no? Like who goes there and who wants to get roasted? But that was the only place that accepted me. And I went there and there was like 150 people in this audience and I pitched. And that day, like I got like 80 signups. One of the judges made a post about me. I got invited to 3 panels afterwards. I got invited to a podcast. So that's how everything started. So this is just like a story to tell you, like, don't be afraid. Like, I think the first thing to lose when you start a company is your reputation. Like, forget about your reputation and just go out there, So yeah.
I love that. And like people are putting that in the chat as well. Like, thank you for sharing that, and just thank you for reminding everybody, like, sort of feel the fear and do it anyway. Don't let things hold you back. Like, you know what your mission is. Like, you just need to go and do it and take the opportunities that come. Thank you so much. Jessica, I know networking and strategic partnerships are also something very close to your heart. How have you gone about like both utilizing your existing ones and then also doubling down and expanding them?
Yeah. Um, it's funny because I don't know if I've been strategic about it or not. I, I'm sure I probably have. But I feel really blessed to be in the startup ecosystem because I genuinely love people in this ecosystem. And so it feels super natural to be forming relationships. And some of my closest friends have come from doing this. Like, so it's a really like beautiful space to be in. I find founders want to help each other. And so I can't encourage you enough. Like if you end up chatting with someone from this call, reach out to them, like, have a one-on-one, like, don't be afraid. Yeah. To, just reach out to people because everyone's trying to muddle their way through it. And we only kind of get where we go because, people are supporting us. And I definitely feel that way about my journey. So if I think about the very beginning, I had been in tech, but in New York, but not started something. And so I think I remember just leveraging every network I had, like, Chief, I'm part of Chief, which is actually how I know Tori, like, and so I reached out to people there and then people introduce you to other people and it just kind of happens naturally. So I think Marta said it better than I can in terms of just putting yourself out there, trying. And like someone once gave the analogy of the more atoms that kind of like you move, it's a physics thing. I don't understand physics, but there's more opportunities for things to kind of bounce off each other. And hopefully it feels authentic to you. Like I said, I can't really fake it. And I don't really believe in that. So, cause I think people can feel it and it's not very energizing to you. So find your people. This is a big ecosystem. Like find the people you really connect with, you want to help each other, and go from there. I would say. And then one thing that's interesting is though, like if you are a helpful person, if you've worked hard at your previous jobs, like I'm actually remember something now. So even though my VC found me on LinkedIn, they asked as a reference the CEO of the last startup where I had worked, who very thankfully wrote like an amazing recommendation. And it just kind of gets to the world is small. Like, so if you show up as yourself and you're helpful and you work hard, like I know it sounds kind of silly, like that's the best. And in April, I mean, you mentioned the same, like people who just put their name out for you. To the extent you can just be yourself and lean into your strengths and the people you authentically like to be with. I know it sounds cheesy, but like I can't really say anything otherwise because that's just been my approach, which not only gives me the most joy and energy, but like I said, I think is the most authentic for everybody. But it really matters. And it's funny, like another friend, who and these are like new friends, by the way, over the last few years, like some of my closest friends I've made as adults. So like, don't think it has to be like, oh, you can't, make these connections and friends, at this point. And like one of the people who is the most responsible for my success in this pivot is now a close friend, but started as an acquaintance introduced by another mutual friend. And so, like I said, it just, and if you're open about your journey, like I actually was speaking, and that's why, like, I really appreciate March and April are so open about this, like, because I was speaking to that mutual friend and, I was considering, like, do I give this money back? Like, what do I do? Because I still had my pre-seed left, but my other idea had flopped. But I didn't really want to do that, but I thought it's responsible for me to at least explore that. And if I hadn't said that out loud to that mutual friend, I don't know that it would have occurred to her to connect me to this other woman who, like I said, has been, one of the people who've been just like an angel in terms of helping me build all the momentum I have since the pivot. So anyway, this is all to say plug for like, there are a lot of people in this ecosystem. Be yourself, be helpful, find people you jive well with, be open. You have to be careful who you ask what, who you say to what. But like, again, in that situation, if I hadn't even been comfortable telling my friend that this is something I was thinking about, I don't know, that would have thought to make that connection in that moment. So those are my thoughts on the networking piece.
Thank you. And before I come to April, I'm going to just say we're probably going to do like questions for another 5 minutes, and then start answering audience questions. So if you do have a question that you want answering, and I've seen a few pop up in the chat, now is the time to start putting them in. And Jessica, thank you for answering yours from before. So moving on to April, and another way to obviously grow a successful business, hopefully the only way to grow a successful business is to have revenue from paying customers and to build like an amazing market, to build a great product that sells itself, to have a great marketing engine. And I feel like you've done that so successfully by being able to like think about product placement and great brand collaborations. Could you maybe speak a little bit to that and like how you found your sort of your niche that's worked for you and Cheeky?
Yeah, so I think just to clarify, when you're speaking of that, do you mean like the Kendall Jenner thing, for example? Okay. So what the opportunity that I see for Cheeky, we're at cheekycocktails.co, by the way. If anyone wants a visual reference, or you can just look behind me, you can kind of see some of the bottles. But so we have a really clean, minimalist branding. We have shelf-stable products, and these are either replicas of or our own recipes that are basically what professional bartenders use. So it's the highest quality raw materials, and they solve real problems for cocktails. So it could be an espresso syrup for 2 ingredient espresso martinis, 100% lemon juice or 100% lime juice, no preservatives. So like the products are very specifically, I chose them because they are in such demand and they solve real cocktail problems. So there's that first from like the ingredient perspective and the solution perspective. The branding was one of the other reasons that I knew that there was a huge opportunity in this space. Premiumization in the spirits industry has been accelerating growth or driving growth for at least 15 years, if not more. And then you also see simultaneously, when you look at just food and beverage products, there's a strong preference for increased transparency, like clean label ingredients, et cetera. So as somebody who's worked in the industry for so long, I knew that these two trends, these two macro consumer trends, were going to intersect somewhere. So all of this is to say that the products that we designed solve a real need, both aesthetically as well as in like what it actually does for the consumer or the trade professional. So I think that that was number one, the most critical component of our success to date. We have spent almost $0 in marketing in the nearly 5 years we've been in business. We've never had a salesperson. We tried 2 salespeople for like a month each. So we've never had a sales force. Yet we've done collaborations with Kendall Jenner and Kris Jenner's 818 tequila, with, Ciara's 10-to-1 rum, like all these really high profile folks. We've been in the New York Times multiple times, Forbes, Bon Appetit, like a whole 9 yards. And so we've had a tremendous amount of success in all of these different areas. But that was because the product design was very specific to capture a very specific opportunity. So I really think it's if you can really understand the consumer need or your audience need, like as intimately as possible, and you are willing to co-create with your audience and evolve that over time so it actually does what you want it to do, then I think that is the cheapest way to like really scale a business and really build the brand aspect of it in addition to the commercial revenue side of things.
Mm-hmm. And so I love the fact that you can just go, oh, was it the Kendall Jenner like collaboration? Like as if, everybody gets a collab with a Kardashian. Like how did that even come about? And I appreciate the probably sensitivities around some of these. So like if you can't talk specifically about one, maybe some of the others, because like there's normally like a tipping point, like something happened and then it led to that. Like, can you speak to any of that?
Yeah, so it sounds really basic, but if you look at shelf-stable lemon and lime juice, almost every option, it looks really like cheap. The packaging is not nice. There's preservative, everything's from concentrate. So even if you just do a quick Google search, immediately our product stands out from the rest, just for like a super basic thing like that. And so what I knew to be true from, almost 20 years in the adult beverage space is I knew that there was a need for this. I knew as, a cocktail instructor who has taught dozens and dozens and dozens of classes to thousands of students, I knew that people were looking for these products. And so I knew I've worked with spirits brands. I was a brand ambassador for Bacardi rum, traveling the country. I knew that there was a huge appetite. It just, the product didn't exist. Like the solution didn't exist, at least not in shelf stable form. So that is ultimately like, I knew that people would be looking for a product like this, and I knew that there was a gap in the market. And so I do feel strongly that eventually we will collaborate with every single celebrity-owned spirits brand simply because they need products like ours to present their products to the end consumer.
Mm-hmm. So basically, they were looking for a complementary product and found you because you had the right product at the right time.
Exactly. No, but that being said, the sort of flip side of this, and I'm sure a lot of other folks on this call can empathize too, is because we created a mini little market, a product line that didn't exist before. There's also the price that you pay for being innovative. Like there's more explaining that you got to do. It takes you probably longer to convert somebody than somebody who's like, oh, tried and true, like whatever, margarita mixer in like a huge container. Like it takes a little bit longer, I think, in the upfront to get people familiar with your product. But the great thing is we have incredible retention once we've got people. So if somebody likes us, loves us, and they stay with us for a very long time.
Amazing. I thank you, because I think, I mean, that in itself could be a whole separate thing, the marketing, the product development, the storytelling all around it. Okay, great. Well, last question. There are a million different resources and tools, and whether that's from a fundraising perspective, from a business growth perspective, from grants, from crowdfunding, whatever. Maybe could each of you go through and just share any particular resources that you found most useful along the way? Because if you found them really practical, then other people will do as well. And maybe let's start with Marta.
Let me think about that. So let's start with someone else.
Okay. Jessica?
I have one that's right off the top of my head. So if I think of more, but I'll get us going with this. So I mentioned the Primary Ventures Founder Fellowship. The first book they had us read was The Mom Test, which I think is sexist. They should call it The Parent Test. But basically, it teaches you how to do market research and talk to whether it's consumers or customers, B2B or B2C, because you can do that in a way that gives you kind of crap data back or data you can't rely on. And it's all in how you ask the questions. And so honestly, like regardless of where you are in your journey, honestly, I sometimes have reread parts of it. And in fact, I should reread it again right now. But certainly if you're in the beginning of your journey, I cannot recommend this book highly enough. The actual author, I'm forgetting his name, Patrick or Ryan or something, does the audio, or you can, you'll get through it pretty quickly, but it could make or break how you ask questions when you're doing your research to develop your idea or further develop your product, to make sure that what people say back to you is like data you can rely on. And it's called the Mom Test because he basically lays out a method that if you were to ask even your mom, who ostensibly would want to make you the happiest and, potentially lie to you, that even your mom couldn't lie to you and say things just to try to make you feel better, which is why I think it's sexist and should be called the Parent Test. But anyway, if you haven't already, please read the Mom Test or reread it. So that's the first one that comes to mind.
Amazing. Thank you. Okay, I won't necessarily call on April or Marta, but whoever has a resource, feel free to share.
I would say three things. I just thought about it. One is people that you think can help you, although you don't know them, like message them and reach out to them. Like to be like, I pay for LinkedIn Premium literally because I use all 150 cold messages that I have per week. Like this is the amount of people I message every week that I don't know. No, really. And this is not what you should do, but the most, for me, the most helpful thing that I've done, since I got here, has been talking to people and reaching out for help. And the thing that has surprised me the most about this country is how helpful some people can be. Like, just to give you an example, one of our mentors is the head of revenue at Siemens, So and only because
so shoot your shot. Don't be afraid to ask and contact people.
Yeah, only because I cold messaged this person and then I followed up and so I think I would say the first thing was people. The second, I would say customers. For us, for me, the most helpful thing to do is as soon as I launched, I started talking to everyone. So I just messaged people our customers have my WhatsApp number. I talk to them. I also have Crisp. So Crisp is like an app that you can like integrate into your platform, and it's kind of it's like a chat. So I can talk to my users all the time, and it's like a customer support thing, but it's also connected with the email. So I talk to my customers all the time. I have a close relationship. And not only has that helped me understand their pains, but also like upsell. So they are like my ambassadors. They have helped me like upsell to their company. So super helpful, the customers. And third, I would say this book. This book was so clear. It's a really short book. It's about fundraising, but it's like super practical book about like how to like I think for everyone, even people that have already raised, people that haven't, it's like 50 pages, super practical. It tells you like even the emails you have to send, like how to interact. So super, super useful book.
I put it in the chat, but +1 to that book. You can listen to it in under an hour. Also recommended to me by another founder. So I'm just plugging that.
What's it called?
It's Ryan Breslow's book called Fundraising. Someone asked in the chat.
And we'll share all of these in the follow-up email as well, including a link to like the YC Safe and the Mum Test, all of that too. Did anything come to mind for you, April? Or maybe even like what not to do?
Yeah, I mean, I would say two quick things. My favorite is Google, and I am saying that a little bit jokingly, but definitely not. Also, I think that given everyone's circumstance here, tapping into women and minority-owned organizations, dropping that into Google and saying women minority accelerators, women and minority fundraising, like just any permutation of that will be really helpful, because all of these organizations have a tremendous amount of resources that are geared particularly towards you. So I think one of the errors that I had made in my journey was I just was like gonna do it all by myself. So for years I was like focused, I'm like ignoring connection requests. I'm just like, I gotta focus to get this done. And the second that I sort of opened up and started letting people help me, that was a game changer, and it continues to be a game changer. So I think tapping into networks of people who are like want to help you, like that's what they do. That's like the easiest, lowest hanging fruit, and continues to be for me as well.
Mm-hmm. Fab. Thank you. And I'm going to just add one here too, which is like, don't get overwhelmed. I think it's like, it's very easy to like almost like try and resource collect. So it's almost like the anti-resource. Like people are posting stuff on LinkedIn and they're like, hey, here's a list of a million different like VCs that you should know. Here's like this book and that book and this article and that article. And you always want to like try and like hoard it all because you don't know when you're going to need it. But it can just lead to such overwhelm and like analysis paralysis that I would really say like try to be particularly strict with yourself based on like what you need at that moment in time, because like that information is never going away. Like to April's comment, Google is going to be there for a really long time, so chances are you're going to find something again. So like just don't get caught up in all of the crazy information overload, because it's really easy to do. Okay, amazing. So wow, we've sort of gone a bit long, but I guess it was, I hope everybody was finding it really useful. I was seeing some positive comments in the chat, but if anybody here has any resources they want to share, please do add them and we will keep sharing those with everybody afterwards. But now let's just open it up for questions. And I've seen a load in the chat. I know we've answered some of them too. But I'm going to start with just a question about like crowdfunding. And this one I think was from Karen, obviously specifically for you, April. Like what was the process that you went through to think about, firstly, that you even wanted to do a crowdfund campaign in the first place, and then the time that you chose to launch it?
Yeah, so I made a decision to crowdfund. So just for context, the first version of my business, we did a Kickstarter, which is different. That was not for equity, that was for product. So we were launching the business. We needed X $1,000s for a juicer. And that enabled us to kind of from a marketing perspective, socialize the company, get people excited and involved. So when I did my WeFunder, the conversation, I mean, I think most people here know that the economy has been in flux. There was a lot of drama, specifically like with the in the investment ecosystem over the past 18 months. And particularly, again, I'm very familiar with consumer packaged goods and less so with other industries or other sectors. But within CPG, the conversation was investments are not happening and venture capital has left the building. So with that sort of fearful environment, everything that all of my advisors were saying is like, it's going to be hard to raise money right now. And so I said, okay, well, what's a positive way that I can generate momentum and get people excited and have conversation in a public way about our fundraise, which, as a little bit of a sidebar, there's a lot of legal reasons that you're not able to like publicly solicit unless you're a public company. So I can't like post on LinkedIn like, I'm raising blah, 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 like give me some money. So this was a framework where I could talk about the fundraise publicly. I could share some status updates. I got a lot of people engaged. And so it killed a bunch of birds with one stone. And it, as I mentioned, I alluded to, I also received several direct investments from people who were like, I love it. I found you because of the WeFunder, but I want to make a direct investment. I want to write a bigger check. And I was like, that's fine with me. So, so that was the thought process.
Love it. Thank you. And Jessica, how did you, like, I know you spoke a little bit about like your investment journey so far, but like somebody was asking specifically about finding your lead investor and like creating that urgency. Like, was that initial person who like outreached after the 10 months or whatever, like did they turn out to be your lead? Is there anything else that you want to sort of add to that?
They did turn out to be my lead. And again, I think what really gave them like, fire, it's all about creating FOMO and urgency, was I had another term sheet. And so I was able to basically say to them, like, it's now or never. These are the terms. Like, if you can beat the terms or like at least match them, like, I want to work with you guys. And so, but obviously it was a yes, that fund had reached out to me 10 months later, and it happened to be at the right moment. But that moment I wouldn't have been able to capitalize on it as well if I hadn't been doing that fundraising over the prior 2 to 3 months, gotten those great angel checks in, and gotten that term sheet from another VC. So that's how I found them.
Okay, amazing. And then one very specific question just around like going down VC. Nobody asked this, but I feel like it's quite a quick one. What do we think about meeting stacking and like creating like artificial urgency that way? Like for folks, maybe not everybody's heard about this, but like there's a lot of talk about, you're going to run a really tight process. It's going to be over 2 weeks. You're going to have like 15-minute, 30-minute blocks back to back to back to back to back. Did you guys follow anything like that? What do we think? Is it successful? Is it not successful? Did you just say sod that? Any thoughts to anybody?
I'll let April go, and then I'll try and manage. I'm sure she has a more helpful answer than I do.
Oh, no, you can go. I'm not sure mine's helpful either. Go ahead.
Well, so what happened to me is when I went out to raise my friends and family, I had actually not intended to raise from a VC. So I had been taught about this running a tight process, because to Tori's point, it creates urgency. It doesn't allow a lot of time for people to say no to you and then tell the other VCs they said no. And then they're like, oh, your deal's been dragging on long. Like, you haven't raised. Like, you do have to manage all of those perceptions. That is very real. I will say that. But because I had not intended to raise from VCs, it ended up being kind of network based. Oh, you should talk to this founder. Oh, I did an angel check. You should talk to her. Like, I did not run a process for my pre-seed. Having said that, when I raise my seed, I think I will run a process, largely because I want this to take the least amount of time possible, because as a founder, like, I have a lot more important things to be doing in terms of like building my product, serving my customers, getting more customers. That's the thing I love to do the most. I don't mind fundraising, actually. Like, it does take a fair amount of something to get through. So I'm not dreading it by any means, but at the same time, like, the less time that takes, the more resources, myself mostly, I can put towards the business. And so I am thinking that I will run a process. I've not yet heard that that's not best practice. Again, you have to, constantly be thinking about this, because even if you run a process, it may not actually work out that way, and it may take longer. So you have to be a little bit strategic about which VCs you start with. Do you start with, a lot of people said make a spreadsheet sheet with like tier 1, tier 2, tier 3. Some people believe in starting with tier 2, some with tier 3. So you can go to other resources about all of this, but I will just say, like, I'm not a better resource than any of these books or articles, but from my N of 1 experience myself and talking to a fair number of other founders, I think it is best if you can run a tight process and it works out. And then if it doesn't, you have to, manage, a little bit of the story around that and the timing and all that stuff. But TLDR, yes, I think it's a good thing to do.
I think so. So for me, and I'll try to give a quick answer, but I think for me, I was never really comfortable with that. I mean, yes, I want to spend as little time as possible fundraising simply because I want to work on the business. But at least with the angels and the family offices that I've spoken to, and I think everybody who's invested in Cheeky so far, all of the serious investors were really respectful of my time and our timeline, and they gave quick answers and they did the transfer really quick. So I think for the type of investor that I'm talking to, there's other things that are as compelling as a short timeline. So for example, our CFO, our COO, my business coach, and now our PR agency are all investors. And so when I communicate that information, and my pitch coaches. So when I communicate that information, or when that information surfaces, that gives them a lot more confidence, where they're like, there's the doubt is leaving my mind, or like the questions that I had, now I know that there's other people who've already put money into this thing and put their reputation somewhat on the line as well. And so I think that has been some of my most effective, like, conversion, is like, other people who are very trustworthy trust me. And that's, again, the timeline thing has never worked. Everyone I spoke to was like, oh, really? You're closing it? Oh, like, well, let me know when that happens, So this is just a tactic that worked better.
Yeah, thank you. Yeah, I appreciate that so much. And then lastly, Marta, you were looking, or at least to date, you've been looking for resources in different ways, whether that is getting co-working space from, funded by the government, or like grants and things like that. I mean, firstly, very quick question. Somebody asked, was the grant from the US or Spain? But regardless of that, like, how did you even go about like finding relevant grants in the first place?
So quickly to the first question, both. So one, like the office grant is from Spain. The other things are credits. Like it's not grants, it's credits. And you can get it from, like, if you're on Microsoft, if you're a startup, you can get credits from Microsoft. You would get like ChatGPT credits. You can get credits from Amazon. Like, it's super easy to do that. Like, just research, Google it, and you will find. And you shouldn't be paying for almost anything at the beginning. Like, don't pay, because there's always either Google, Microsoft, or Amazon will have an alternative for anything you're looking for. So get credits and don't pay for anything.
Mm-hmm. Yeah, I plus one to that. I haven't paid for Airtable for 3 years. Like, I'm stacking credits on top of credits.
There you go. And on how to find it, like, I think also both, like, either like you can find them on structured ways. So if you're in an accelerator, like a lot of accelerators have like partnerships with different grants or credit providers and stuff. So just like research, like look into that part of the website of the accelerator you join, because they will have a lot of stuff about that. But also, like, you can, the office thing I was talking about, or the interns I just reached out to the university, like, proactively. Like, so it's a lot about like asking for it, and like being authentic in your story. Like, for me, I reached out to the university I went to. I told them about my story, and so like a lot of it was reaching out, asking for it, or even like showing up, and getting it. So right now we are working from just to give you an example, we're working from a WeWork in San Francisco. It's located in the Salesforce Tower. It's like a pretty cool place. And we got it because I showed up. The government of Spain had like a little office there. I became friends with the people running that, showed up again. And the fifth day I was like, hey guys, do you mind if I hang out here with my teammates? And then they formalized it and it became like a formal thing, you know, but it was more like a kind of proactive thing.
Amazing. Well, thank you. So with that, somebody said, should we do a group photo? So I'm going to say yes. Eagle is going to keep posting a few bits in the chat. Firstly, everybody, like April, Jessica, Marta, this was amazing. And you've also very kindly given everybody promo codes. So you can try Cheeky Cocktails and Scene Shopping and Ting. So we're going to put those in the chat. We're going to send them over in the follow-up email as well. While we do that, let's take some group pics. So if you can come on camera. It makes it look much better for socials. If you want to hide and you don't want to be on camera, I completely get it. It's getting late in the day in New York, so you could be a little bit exhausted. And if anybody's coming in from Europe or somewhere else, like it's even crazy later. And for Marta, bless you, is it like 1 o'clock in the morning? I hate to even think. Like, so that's how passionate she is in helping support. So massive kudos to Marta there. So okay, everybody pull some funny picture. I'm the worst at doing this. But let's just do a few, like 3, 2, 1, smile. If you want to do, I don't know, thumbs up, high fives, whatever it might be, just, show some love. We'll do it. Perfect. So with that, thank you again so much. If we are going to do networking, so if you can hang around, we've got breakout rooms set up, ready to go. If you need to drop off, completely get it. Marta, April, Jessica, again, thank you so much. And like I said, we'll be sharing everything afterwards.